Hi, it's George Nordhaus, and today's Monday morning is a follow-up with the McKinsey report. We did a couple of Monday mornings on the McKinsey report a year ago or so, and the McKinsey report was a few months old at that stage of the game. But the McKinsey report really, and that's of course the McKinsey company, you know who they are, and they said some things that got everybody's attention. A lot of people got shook up in around the country and all that, and so we decided to take a look at it after a year to see whether it was right, it was wrong, if where we think it's right or wrong, what kind of future. And so to do that, I picked two guys that I know that probably know more about what the future is, or as much about it as anybody I know. Scott Addis, who runs Beyond Insurance. Scott had his own agency for many years, sold that agency. He owns and runs Beyond Insurance. You know who he is. He's done a lot of reporting for us, and then and I'll give you his contact later. And then Bruce Cochrane, who's Renaissance Alliance Insurance Services, which is the biggest, I guess, in New England aggregator. And Bruce has done a lot of work with us. He owned his own agency, and he moved it on into RAIS, as they call it, but Renaissance. And they do $500 million worth of business with a number of agencies, 100 agencies or so up there. Very, very cooperative. But both of these guys have really been on the thing since it started. And they've read it and understand it. Remember this? This is what it was called, the evolution of property and casualty insurance distribution. Here's what within 5 years, said McKinsey, that personal lines of small commercial customers will interact with their agents and carriers, of course, through mobile devices and all that sort of thing. Well, we understood all that, and they were right about that, of course. Technology to increase their direct interaction with the primary customer, and that's one of the things that we want to discuss with the guys. They said that agents should be compensated for the value, and of course they were right about that. They say that everybody's going to be focusing on profit. There's no surprise there. But the winning agencies are going to deliver tailored and relevant expertise and multi-channel marketing. And of course, that was the big word. And then they said, "Is this the end of the era for local insurance agencies?" They say that we're not in danger of extinction, but our role is going to evolve. We got to think about the changes and so forth. And you know, that's not a surprise to us either. And so again, and they looked at back in those days, or back in these days, insurers competed on still the strength of the pricing, obviously, the ability to return quotes quickly, and the quality of their agency force. Now, management, when they have management discussions, how do we grow the agency force? How do we make it easier for them to do business? Incentives to award their entrepreneur. But before we go into 10 years later, Scott and Roger, anybody, either one, what do you think to what they said, their overall conclusions before we start? Either of you, both of you. Scott, you start. How about that?
Well, thank you, and I'm very pleased to be in the program, and very pleased to join you, Bruce, also, and thank you, George. You know, when we did this, my gosh, I guess a year or 9 months or so ago, I really pushed back on McKinsey and said I didn't think they were right in many ways, but I have to say that things are happening so quickly in the industry, and in many ways we have to realize that McKinsey wasn't trying to take shots at the industry, but trying to be helpful. And in many ways, I would have to say that I now can see that many of their comments may be very valid. Bruce, I don't know how you feel about that, but certainly I can now beginning to see that what McKinsey said, certain pieces certainly may come to fruition.
Well, I generally agree with you, but I think that in the overall sense, anybody who engages or attempts a broad sweeping analysis like this, you're going to have, anybody can take pot shots at various pieces of it. But I think I agree with you, Scott, that in the overall sense, most of what McKinsey is predicting in terms of the major changes is spot on. The question is, how will independent agents react, and how will that landscape affect how independent agents do business? And I think that's really what's on the table right now for all independent agents.
Well, with that in the background, they jumped up 10 years later, they said, and they said that because of the greater consistency and the lower transaction costs and better capturing and leveraging of data, that they're taking on many of the activities that were once the responsibility of agents. They said, for example, on that, agents have a diminished role in risk selection and pricing, and that I thought was That was a little bit of a shocker to me. Then they said that complicated that arrangement is all the technological stuff that we're doing. But the clean division of activities and agents is no longer serves carriers the way it once did. And then, of course, the multi-channel. So let's go back to that one right there. Do you agree with these points on here, market? Anybody got any feeling about either one of those things?
Yeah, I think predictive modeling is part of a big data picture for everybody. And predictive modeling has created the condition where many of the carriers now feel they're responsible for the loss ratio. And we began having these conversations with them 5 and 6 years ago, whereby they figured, okay, all we need to do is get a lot of risks to pump through the predictive model, and the model itself will pick and choose out of those risks, those which will make us a profit. And I remember having a conversation with one carrier and saying, so therefore the agent does not have an influence on the quality of the risks that the carrier winds up writing. And I almost got a yes to that answer. Carriers, we've always believed carriers only want three things. They want volume, they want profit, and they want ease of doing business. And nothing has changed in that equation, nothing will change in that equation. Most carriers now are looking to do business with agents who can drive the volume of risks to them so that their predictive models can choose those which are going to make the profit. And that's the end. In the end, that's where agents have to be. Agents really need to be able to corral the risks in the front end to be able to provide to the carriers. And that way, agents will never lose the value that the carriers are looking for.
Okay, Scott, any thoughts on this one?
You know, it's interesting. McKinsey sees the insurers as taking on many of the activities that are currently the responsibility of agents and brokers, and they also envision a world where agents and brokers neither have scale or operating efficiency to ward off commoditization. But George, I mean, as you know, for example, I'm just one little guy who, with this consulting firm Beyond Insurance, is trying to help agents and brokers become more consultative and diagnostic. And I think what's being missed here is, yes, we're talking about maybe the transaction, but what agents and brokers do is so much more than a transaction. It's helping the consumer become better educated about the risks facing the family or the business. It's helping them think strategically about risks. It's not just the insurance transaction. It's for a business, helping them with policies and procedures and systems and controls and business continuity planning. So I think it's really the agent or broker today is much more sophisticated than tomorrow, and although the transaction may become more efficient, I still think the agent or broker who is really acting in a consultative and diagnostic capacity will have a flourishing career today and in the future.
Good point.
And I couldn't agree more.
Yeah, we both agree with you. Then, of course, they talked about multi-channel, and we all know what's going on. You know, what they're really saying here, I think, is that customers are in charge. We used to be in charge of communications, and I think they said, hey, customers are going to be in charge because they can get so much from so little. The walls between traditional distribution channels are crumbling. And then they said the shoppers jumped to one channel to another as they moved from information gathering to purchase and beyond. And I don't think we disagree with that. I used to always say, what happens when you ask your agencies or your customers, who are they talking about? I mean, who are you insured with? And, you know, all those years they said, well, I'm insured with the Jones agency down the street. And I suspect that today it's very, very hard for these agents to compete from the standpoint of the dollar and cents standpoint. Well, and so therefore I think what they're saying, who are you insured with? Well, I'm insured with Travelers, or I'm insured. But I'm not even sure of that. I'm not really sure of that. I know the Geico people do that. I know the the big direct carriers, people spend all the money. I know the guys say, I'm insured with Geico, or I'm insured with State Farm. I understand that. But I'm wondering, and I want you guys to think about this a little bit while we finish this. I'm wondering if the carrier brands are also fading because they're not spending the money. Just think about that just for a minute. Commodities, of course, is what's doing it. The agents don't have the money. You can't go down to advertise it. New business remains low. The average premium per policy is that flat. What do you think about what do you think about commission rates while we're talking about this? The agency model it's a distribution for carriers. They didn't spend much money until the policy was sold, and now it's appointing new agencies and everything. But carriers today, what? How is it? Tell me. You guys tell me. Anybody?
I'd be glad to start, George. Just a couple comments. First of all, brand. A number of years ago, someone said to me, what is a brand? And the simplest definition I had was what people say about that organization. So a brand really is what people would say about you. And I sit back and say, in all due respect to the insurance carriers, it's that agent or broker in the local community that still today is touching the customer very carefully, and and I really think that still today people know how much the typical agent or broker really cares and is on top of their game. As far as commissions, if I could tell a quick story that might be helpful.
Please do.
I'd say in 1995, we had a number of our clients at the Addis group that really were thinking or desiring to go into some kind of a self-insurance model. So we explored different options, and we settled upon a program today that pays 4% commission. Once again, 4% for general liability, auto, and workers' compensation.
Wow.
At the time, we said this is impossible. How do we actually run a program where we have 4% for GL, auto, and comp, and there is no profit sharing or contingency? I can only say here we are now, a good almost 20 years later, and I can say this program that we're running has $5 million of revenue with 9 people running it, and that's going to be well over $500,000 per employee. So we've learned to be very efficient and live with that, but I would say that and still provide a very good customer experience journey. So I think the reality could be that if commissions might be at risk or lowered to some degree, I think we are entrepreneurs. Most agents, brokers are entrepreneurs, and we find other ways to go ahead and fill the void. And the last piece there is that, for most agents and brokers listening today, I would say that the commission is a piece of what they get. A larger piece, assuming they have a profit-sharing arrangement, is going to be if they can help grow with a carrier, if they can certainly have a good retention, and lastly, as the loss ratio is positive, their overall compensation is far more than just the commission itself. Bruce, your thoughts?
Go ahead, Bruce.
Yeah, I think one of the things people are losing sight of here is that we're all talking about how landscape is going to change for agencies. Landscape for carriers are going to change just as radically. You now have a lot easier access to capital, and you're going to, with predictive modeling and the use of big data beyond predictive modeling, you're going to find smaller players, more specialized, and I predict the number of outlets and carriers that we have is going to double, triple, or quadruple over the next 10 years as each one narrows its focus to be able to focus on that which it can do best. So that's going to change, and there are going to be more options for both agencies and carriers going forward. The carriers are going to have more options for where they get the business. Agents are going to have more options in terms of risk-bearing entities to share their risk. The other part is that, yes, commissions are going down, but all that means is that price goes down inexorably in every business. It's all the function of the change that we all go through. How can we do it better, faster, and cheaper? And so that means that agencies, number one, have to become more efficient. They have to be able to pool their resources more. But by the same token, they also have to broaden their revenue base. I think agencies are sitting on a powder keg of opportunity with other products and services that can be sold and delivered to the same customers that they're servicing for insurance.
Well, I think, Bruce, that, and I'm sure that McKinsey agreed with you, and we'll get to that very point. And as far as Scott's comments are concerned, Scott, I totally agree with you. You mentioned the relationship situation. As both of you know, I'm developing a new program for relationships, formalizing them for agents. And I think you're going to see a lot more of that. That's going to tie right on in. But let's move forward to the obvious questions. What's the future of the local agency? How can the agency continue to add value? And then that's what we're really talking about here. But our friends from McKinsey did an analysis, did a comparison, and I thought it was really good because it got to me. They're talking about the travel agency. And we all know what happened to travel agencies I don't use travel agencies anymore. I go online and do my travel. And I bet you it's the same with you guys. Bruce, of course, Scott travels all the time, so he probably has somebody to do it for him. But my guess is they're not using a travel agency, right, Scott? You do it themselves?
Yes, correct.
Correct. Well, travel agencies, of course, they had some problems, and they reinvented their business models. Those who did it, many of them went out of business. I know the mine that I was using back in Los Angeles went out of business, couldn't cope. They went more complex travel and specialization. But I thought it was really kind of interesting because of the fact that they say, hey, you guys are the same way. You're going to go out of business because everybody can get it cheaper. What do you think? Anybody? Do you have any feeling about that? Either of you?
Well, I feel very strongly on this one, George. You know, you think about insurance or risk management or employee benefits or compliance or HR.
Yep.
These are complex issues. These are not. It's not as though we're trying to get from point A to point B as a travel agent gets us to a destination. We're also focused on, you know, protecting the assets of families and businesses. And I would suggest that, and this is being very respectful to travel agencies, that they certainly provided a great service, but I think what we do is much more complex, and whether it be the sale or the service should be looked in a very different light.
Yeah. Bruce, anything?
Yes, I totally agree. And as we said before, these two pieces, operational efficiencies and technology, is where agents are going to be able to gain the resources they need to be able to deliver the extra value added that they need to produce. And again, we'll go back to what Scott said a minute ago. Independent agents are entrepreneurs. Entrepreneurs find a way to adapt themselves to the changing environment.
Yeah, I think you're exactly right. Well, then let's take McKinsey talked about the multi-channel more, and we know about that, and the walls are crumbling down, and they say, and we've already, we've touched on that a little bit before, and they say then that carriers are making big investments, central contact centers to handle questions, and I've watched those along, and I'm kind of I'm not into it like you guys are into it on a daily basis. Carriers are going to replicate the feel of an agent's office, they said. What do you think of that? I think that's fascinating. And then they said as more customer interactions filter through them, agents will decrease their customer and add value to interact with the customer, and that's the main reason I'm heading in towards formalizing the system. Get those contacts going. What do you guys think?
Well, George, I'm sorry, go ahead, Bruce.
I was just going to say that carriers creating central contact centers, those are transactions, and as I said before, this is a complex product for all of the aspects of it, and the consultative approach cannot be replicated in the contact center.
Yeah, you're right
George,
about
I'd
that.
like to absolutely agree. And if we look and think about the medical profession, you could have some tremendous technology that actually assists the physician in actually the operation itself. But to move back, you have to have someone who is consulting and diagnosing. So the patient very well may go through the procedure, and that becomes maybe more advanced and so forth. But to get to that procedure, someone first has to go ahead and understand what is wrong with the patient. How do we go ahead and make the right application? And I think in some ways you could take the medical profession and look at our profession and say that, yes, we may be at a point where the transaction is becoming more efficient, but in reality, the art is still in whether it's on a family or business, really truly understanding what are the issues facing the family or the business, what applications can we make, and really the realization is insurance is one of many, many applications, and that is a way to risk transfer. But truly, there are many other areas what I think are in the hands of the agent or brokers going far more than the transactional piece.
Yeah, I think you're exactly right. Well, they had McKinsey said that just what you guys are saying here, insurance agents got to have developed new strengths and so forth, the value proposition, which we understand for carriers and consumers, and that's what you're saying, it's the entrepreneurial thing. I thought this was good. There's no single model, and I think we all understand that there's no single model. Maybe the agency's numbers will decline. I'm not sure about those. But what you're saying again, the ones that are going to survive are going to be stronger. And then McKinsey came up with these things. I'll just remind you guys, they said that necessary for survival, the agents have got to have a target market, know where it is, leave behind the local market paradigm. You're going to have to go further, and most of them are 5-mile radius and so forth. But they're saying that's kind of limited, and maybe it is okay. I don't think they said it wasn't okay, but what they were really saying was define and reach it. And then they said define and reach a target market, broader view of your market, and an articulation of their target customer segments, what you guys are once again saying, and I think maybe they were right on that. And then defining and reaching it, they said to reach those markets, just the local marketing tactics are not going to be sufficient, and you're going to have to reach digital. That's what they were saying, and I don't think we have much of a disagreement with that, do we? Anybody? Are they right or wrong or what?
Well, I think it's all of the above.
I think
the
probably.
bottom line is that agents need to be able to do a lot better job of segmenting both their current customers and their target customers. And they have to be able to do so using as much technology as possible. And it also has to do so by becoming fluent in every means of communication that is out there. Digital, verbal, the old-fashioned brochures, all the contact points that you talk about, George.
Yeah. Well, Scott, any additional thought?
No, and I certainly think we've got to listen to the customer, and especially the new generation that's coming there. And I know one of our concerns for the industry, and a major concern, is the age of those that are in the industry. But to really listen to who is that customer that today might be, in their teens or early 20s, and make sure we understand where they're headed is critical. And obviously, I think McKinsey brought that out very well.
Yeah, I do too. I mean, I think you're right on target here. Customers, I love this, increasingly unwilling to pay for generalist advice. I think that was a pretty strong statement, and I liked that statement when they said that. They'll turn to agents for advice on holistic insurance packages, their personal needs. Yeah, more tailored and deep expertise from the insurance advisors, and I think that's what you guys are saying. Agents would also need, and here's what you're saying too, so I won't beat up and go, and this is going to do more with less, and you're talking about technology. They've said that agents can grow bigger or virtually by banding together with certain functions, but I can't imagine any agents banding together. Can you, Bruce? Can you imagine aggregators starting? I'm putting you on, Bruce. What do you think? How many people are going to be in aggregators? You think what? Bruce, give us an overall thought on it.
It's very difficult for the local independent agent to gain the kind of scale that they need in order to be able to compete in today's economic environment. Generalists, I think they make a good point here that people are going to look to generalist advice, which means that agents need to have more specialized expertise either in their head or available to them. And the small agencies just can't do that. And that's why banding together in groups, whether it be aggregations, clusters, whatever you want to call it, is a technique that isn't going to go away. In fact, it's easy to get stronger going forward. And it's a lot more than just adding markets and profit share. It's being able to have the expertise available, to be able to spend the resources on the technology in order to make the agent relevant in today's heavily technologically driven world.
Well, your points, you did some Monday morning, and you did a couple of them for us on the aggregators, and I thought that was the ABC. It's still there, incidentally. You guys could go to the to Rough Notes or to Agencies Online and see what Bruce, he outlined all that. And one of his major points that I liked, which is just what he's saying right now, there's a lot of clusters around, there's a lot of aggregators around, but most of them go in just for the to have a special deal with this company and all that sort of thing. But when you find an aggregator that not only does all that, but does also the training for it, the sales, the marketing, that helps you out on a day-to-day basis on other things, I think that's the epitome of, that's what like Renaissance does. And I think and there are others too. Keystone's another good one that does that, and I can name a number of them that do it. But you're so right. Bruce, any thoughts on clusters, aggregators, or whatever? I mean, not Bruce, Scott, sorry.
No, I certainly agree with Bruce's thoughts. There's a wonderful book out that many of you may have read called The Challenger Sale by Matthew Dixon and Brent Adamson, but they best frame it by saying the following. Today's consumer and tomorrow's consumer will place the highest value on business partners who make them think, who bring new ideas, who find creative and innovative solutions to help the customer. Today and tomorrow's customers are demanding that their business partner teach them things they actually didn't know. And I think this is Bruce's point, is that the smallest independent agency has so much going on, and are the resources really there to really go and bring them these solutions. But if Challenger is right, and I would say as a consumer I strongly believe they are, we have to be able to teach them something they didn't know, where they said, aha, now I know the value in that organization or person.
Yeah, that's well put. I like what you said there.
Totally agree.
McKinsey had some conclusions. I realize this is in the middle of the, well, we're heading towards the end here, but they are, our distribution landscape is already changing. Well, we know that in personal lines and small lines. The economy will, how we distribute. I probably should have had this slide first but they did this all the way through their McKinsey report. And then we talk about what about the insurers? What about the conclusions? Which agency models are going to emerge? Well, let's take a look at this. Here's some agency models of the future that they suggested were going to take place. How about if there's comments, as there's just 5 or 6 of them. Let's comments on this one. Traditional commercial lines agencies. What do you think? Looking like they're going to do today. How do you feel about that? Are they going to be professionally run and so forth, larger accounts and so forth? Any thoughts? Of course, Scott, that's your both.
Yeah, I would love to comment here. I see a lot of these agencies are really redefining themselves. You know, any great organization over time steps back, but I see some very, very cool things. If I could give one example, there is an agency in Westchester, Ohio, who is a second-generation firm that was called Clark Theaters. A gentleman named Jonathan Theaters, who is, I believe, now in his early 40s, came in the family agency, and a couple years ago said, "This is crazy. I don't like anything about this business. It's becoming transactional. I'm a commodity. We can't differentiate to that degree." And where they are now is just, it's incredible. They have they started off with a process called Risk Source, and what a great name, because in reality they're sourcing risk management solutions for personal and business clients, but they've actually now changed the name of the firm to be called Risk Source. The organization also, to give you some idea, has a 100% hit ratio on the commercial accounts they've gone after with the Risk Source process. They have a loss ratio on accounts that went through the first year, which are 12 accounts with $3.4 million and 8.6% loss ratio. But I guess what I'm getting at is here's an organization that literally was kind of the vanilla a few years ago that absolutely has transformed in a huge way. But this isn't a story just about Risk Source Clark Theaters. I think many independent agencies, as Bruce said earlier, are very entrepreneurish. They're very proud. And I think they have the adaptability to go ahead and to be something tomorrow they may not be today. So I think McKinsey may underestimate just the fortitude and the creativity of a lot of the independent agents.
Good. I like that. I'm good friends with the Cedars over many, many years, father and so forth, and I've watched them. They're just amazing. Any thought on that at all, Bruce?
Well, I would just add to that, and part of the entrepreneurialism that we're going to be seeing going forward is that agencies need to be able to develop a data proficiency to the same extent that the carriers are. This whole big data thing isn't going to go away. And I'm telling agents every single day, if you can't do it, hire someone who can. Most of our principals, of course, are good salespeople, and they're not data wonks. But going forward, segmentation of customers and to be able to get down to the ability to be able to diagnose, as Scott says, in a really analytical way, not just how the customer sees it, but how the agency sees itself running itself. That's how it can be able to parse, the chaff from the wheat going forward and be able to create solutions that are going to make them successful.
Well, I think you're exactly right. Okay, and so then the another model that they came along with was the large multi-line agencies. And of course, we all know who a lot of those are, well-balanced product mix and all that sort of thing. And, of course, we deal with those on a daily basis. I don't know what else to be said about anything on that at all, either of you.
But, George, the only thing you see life insurance up there. I think this is a huge area. I spent the last 3 years really studying that industry, yeah. And the general agency system is not what it used to be. And the number of those people out there that are really marketing and distributing life insurance and related products is scaled back dramatically. Why should it not be, if we are in the business of enterprise risk management, why shouldn't it be the historical agency make life and disability and financial services a key part of their business? The loss of a key family member or a key person in an organization or estate planning are critical issues, and I really think the independent agent should make this a priority, because not only is it the right thing to do, there's also some economic incentives to make it happen.
Absolutely.
Bingo, bingo.
Bingo. Okay. The third was leverage or lower cost models. And I thought this was good. Lower cost model, again, now we talked about aggregators and all that sort of thing. They could take a number of approaches. I don't know if we need to say anything more about that. Anything else?
I'd like to comment here. I think lower cost has two connotations. Number one, you're trying to try to lower the cost and lower the actual cost to the customer. In our way of thinking, in order to lower cost is the means by which you can create internal resources or recapture internal resources that can be turned into more value added for the customer. Independent agents can't chase price the way the big boys can. We have to deliver something other than price, and it's all about value. People will pay a little bit more for value. That's where it's all about.
Yeah, you're totally right. They said another model of the 6 models here was specialized, holistic, multi-line solutions, and I don't think we don't want to argue with that. We don't have any problem with that. What do you think about this? Anybody? More? No?
Well,
I think, George, go, Bruce.
Sorry, Scott.
I was just going to say, I think in many ways, we look at ourselves as consumers today, as consumers, and forget about the insurance or risk management profession. We're trying to get information as quickly as possible, and our preference is to find someone who's a specialist. So I don't think this is any different than any other industry, because we are trying to get information quickly, solutions quickly, and who is that person that really specializes to help us solve our problems.
I think you're right.
I think another overriding thing here is that McKinsey goes through a number of what they see as models going forward. I think you're going to see as many models going forward as there are agencies out there. That's the beauty of our industry.
Everyone's going to be different, huh? Well, then there's the niche expertise. I know a number of agencies like that, don't you? I think they're probably right about that. Any thoughts on that one?
Sure.
Yeah. Yes, Bruce.
I just said I agree.
Oh, you agree? Sorry, I didn't hear you.
Yeah.
Okay.
Yeah,
and there's going to be a lot of those, and we see them. I could give you a lot of examples. You guys see as many as I do, probably or more. And then there's the small virtual agencies, and it's amazing to me. Virtual agency, of course, doesn't have an office or anything like that, and it's amazing to me. Look, he has no physical location. All employees work remotely. What do you think of that type of a model? Either of you?
Well, I'm working with an agency in the Tampa area right now, and it's very interesting. A very successful firm and actually their people come they were truly risk managers who have banded together, and they're working out of their homes.
Yeah.
But I have to say it's a very sophisticated approach, and they're not missing the beat at this point, not just having a virtual office, which I initially was very surprised, but when I look at it, it makes a lot of sense.
Well, I think you have to ask yourself, in today's day and age of technology communications, what is there to a storefront anymore? There are fewer and fewer customers who are actually going into the office to seek face-to-face consultation. And so it makes sense that virtual agencies will have a place in the landscape going forward.
Yeah, I think you're exactly right, and I think that AgenciesOnline is virtual. We have people around the country, but we're virtual, and it seems to work. It really does. I would think that there are some things that you have to be face to face with, obviously, but we're seeing a lot of this. Well, those are just 5 of the things, and then they said that the being McKinsey, decline the number of agencies going to accelerate. I don't know that I see that happening. Do you guys see that or not?
I see an explosion of new agencies coming online.
Yeah, I do too, because of the other thing, because of the ability to.
Well, I find it interesting to talk about the vanishing risk pools. The biggest vanishing risk pool that agents are going to have to deal with going forward is just the simple fact that technology is going to begin to drive down automobile premiums and, as a result, automobile commissions. And private passenger automobile is the single largest line of insurance we have in this business.
Yeah. Well,
so for no other reasons, commissions will be shrinking.
Yeah, right there. They said that too very well, and they said that not all agencies will survive. Well, we already know about that, don't we? But then,
the only thing they might be thinking about with the shrinkage is that if we cannot get this the average age I've heard is now, what, 53, 54 for the independent agent?
Yeah.
And if we can't get new blood in this industry, that's going to happen automatically. But I really believe that we have to go and create a very cool environment where people can see a career path and see a lot of rewards coming in the industry. But that may be what the McKinsey report was suggesting, is that the shrinkage becomes just because as time evolves, many may just leave the industry due to retirement.
Well, I've been hearing that for how many years? 40 or 50 years I've been hearing that same thing, and it is true. And of course, my wife and I have a testing program, a hiring program, and we've seen that happen, on a one-on-one basis. But I think in the long run that we got so many millennials coming in there that are going to be looking for a thing to do and can handle it, can't find a good job going out of college and so forth. Yeah, it's time. It's time for us to really understand how to hire good people. What do we look for and all that? We could preach about that forever, but we won't now. But what about the carriers? What do they do? Well, McKinsey had some thoughts about carriers. He said, here are questions that carriers are going to have to answer. Which of our policyholding segments value agencies? They needed a more sophisticated and granular approach. And I think that's kind of an interesting way to put it. They said that we have to really understand those segments with agencies, which are going to keep them loyal, and how their preferences. Well, this is motherhood and God, I think. We understand that, and it's going to affect their portfolio of agents. They said that how do agencies add value for our targets? Now, remember, we're talking about companies. What unique services they get? Well, yes, that's not the wild thing. That's not the, yeah. Anyway, for carriers, what's a new value proposition in the multi-channel? What can they do more efficiently than carriers? And of course, this is where I'm really into this in a big time on a personal basis, because I believe that the value proposition is bringing the human being back in, put personal back into personal lines. Scott's got a better understanding of both of you have better understanding of commercial line, how to do that than I. But anyhow, these are the questions that companies ask. Are they positioned? What segments should we help? How do we understand more deeply? Let me make a point right here, because this is something that I see on a continuing basis. I can tell you that I don't think a number of companies, this is easy for me to say and hard for them to do, but I don't think a number of insurers really understand the agent's business, and I never have felt that, but even more so right now. I had a big conversation with a company, the top two guys, number 2 and number 3, last week for an hour, and one of the things we discussed, and we said, they said, we are not going forward with anymore with the co-op advertising program. That's just too dangerous. We don't understand what they're doing. They don't appreciate what we're doing. We don't see. We need to see the exact return. We want to see how much money came in, what kind of premium more are we getting because we're doing that. And I understood that. But boy, I mean, does an agency really have its business understood by a company that does that? How do we access it? How can we give us access to the right customer segments? And I thought all these things, how do we fill the gaps? And that's what agents are asking right now, where existing agencies are unable to adapt. And that's a big question. You guys got any thoughts about what companies should do or not do?
All about aligning with agents that are going to be able to deliver to the carriers the kind of customers the carriers want to write. Now, carriers are notorious about their inability to be able to clearly articulate what they're looking for. But I think that's going to change going forward, and you're going to see more carriers getting more specialized, more segmented, and agents really have to adapt to determine how they're going to be able to drive to the carriers those businesses, those insureds who meet the carrier's underwriting appetite. And that's what I get back to the whole issue of effective use of data. That's going to be done more and more that way going forward, and agencies who have that capability will have a huge advantage over others.
Scott?
Yeah, George, you think about it in crude terms, a carrier is a manufacturer of products and services. The agent or broker is the distributor. And whatever industry you want to think about, the magic happens when there is a true partnership between the manufacturer and the distributor. The distributor really understands the manufacturer's products and services, what differentiates them, and on the other side is the manufacturer appreciates the distributor. But I sit back today and I think we hear terms such as business partnerships and special relationships and so forth, but I think in many cases we're moving so fast today, does the agent or broker, although they may represent a carrier, do they really understand what differentiates carrier A from B to C? Vice versa, does the, as you just said, George, a few moments ago, and I think Bruce did a very good job in also capturing that, does the carrier really and truly understand and appreciate what differentiates each agent and broker? And if that's not going to happen, certainly I don't think we can maximize the partnerships that we talk about today.
So that's a pretty good question on the part of our friends from McKinsey, and you're right, of course. They said, these are a couple more of the things that we're talking about here. They can't pay agents. I thought this was very interesting. Can't afford to continue paying agents for activities they're performing themselves. What do you think? You guys agree? Huh? You agree with that?
I don't necessarily think that they're performing things that agencies don't do specifically well themselves. Transactions are one thing, but carriers can't perform the consultative part of it.
Well, George, if you think about the key indicators, if an agent or broker can somehow hit key indicators, which things such as growth and profitability and retention, I mean, they should be rewarded, and in many cases they are going to be rewarded with profit sharing and contingency plans.
Yeah, well,
I agree.
I think you're right about that. Well, the final one was how can we stay ahead of these things, and homeowners and small commercial. How can we slow down commoditization? That's Scott's he's one of the great authorities on commoditization. And what changes can we make to our marketing? Let's wrap up with what do you think about these things? Should they make changes to their marketing messages, products, and so forth? Remember, it's insurers now we're talking about. Tough, huh?
Well, I don't think it can slow down commoditization. Commoditization is really where the consumer is in control. But this is a function of being able to continue to add to the value added, and for each individual agency it's going to be different.
Yeah, I think, Bruce, that you're right from the standpoint of that, but I think one of the ways that we as agencies can slow down commoditization is to convince the customers and our prospects and so forth that the total account selling, I mean, this is going back 50 years, but it's our total account, and this is what we do for you, and we need to know all your needs and wants and so forth. We need to know about your family and your roles, and of course I get carried away with all that, but I think once we have that kind of relationship with our customers and prospects, then we become, commoditization is not a factor anymore. Easy for me to say, hard for agents to do. I know that. Scott, any last thoughts?
Yeah, George, I think as an industry, and I'm going to pick on carriers for a moment, I think we've got to all step back and realize what is our primary purpose in life. And you think about that 15, 16-year-old watching TV, everything they hear on insurance is about what? It's auto insurance. And what is auto insurance? It's price. And I really think we as an industry have to decide that is that what we're becoming? Is it all about little to no differentiation in the eyes of the customer? Is it simply that price? Or can we really articulate how we create value? And I think certainly we as agents and brokers can be doing a better job, but I also think it should be the carriers who somehow get message to the consumer and said, you know what, here is truly what differentiates us. And I would say, and there's a firm called Brand Keys who did a survey of many, many different industries, came and said that as examples, banking and insurance, there was really through the eyes of the consumer virtually no point of differentiation, which we have to say is very concerning.
Well, I think you said something early on when, and I have quoted you numerous times, Scott, where you said that commoditization really brings opportunity to independent agents. And that was a shock because everybody else thought it was a threat. But you said
it's a great point, George. You think about it, when an industry is being commoditized, for that organization or individual that can stand up and have the consumer say, yes, they're different, it creates huge opportunities. So as odd as it is, commoditization creates a huge opportunity for that cutting-edge agency that can somehow position themselves and differentiate in a way that means something to the customer.
Yeah, I agree. Scott, Bruce, any last thoughts?
Yeah, I agree with that. I think it's all about everything's relative in business, and the idea that commoditization is going to destroy this industry, I think, is a fool's errand.
Is what, apparent?
A fool's errand.
Oh, fool's errand, okay.
Yeah, and that agencies can and will use commoditization to their advantage, just as Scott has suggested.
Well, we have to talk about that down the line, and let's do that. Hold those thoughts, guys, because we've had the good thing here, and I know each of you could talk about this for about a week, but I tell you what, let's just wrap up by saying that generally speaking, just give me a short answer. Do you think the McKinsey report is right on or not on, good, bad, or indifferent? Scott?
Well, great question, George. I was a little bit defensive, I guess, when I first saw the McKinsey report, and maybe too defensive. And I look back now, and in many ways, I think there's a thank you to this organization for putting out a report that really makes us think, makes us wake up. And we'd like to prove this very wrong, and I think we will at some point. But I think McKinsey, in some ways, gave us very much of a wake-up call.
I do too. I kind of agree with that. Bruce, any thoughts?
I too was a little defensive at the beginning. I think that in one part of McKinsey they said could this be the end of an era? I think too many people have glossed over the "and" part of it. It's not the end of the era. I think it's the end of an era, and the independent agencies are going to find a new area of prosperity going forward.
Well, I think you're exactly right. But I tell you, let me just make an offer here. Here's the contact slides for Scott, and I'll come to Rogers. To Bruce's in just a second, and feel free, because I know Scott. He's one of the greatest communicators I've ever seen. I send a note to Scott, and I get something back in the next 15 seconds or something. And then I might send him a 4-page thing, and he'll send me a note like saying thanks. But I know he does with one word, incidentally. But I know it's good, and he does communicate like crazy. And so please, and also, and then Bruce's contact is here. And you can contact him and see that, and he'll be glad to help you. If you have questions particularly about aggregating and all that sort of thing, he is. I suspect that the Renaissance will continue its growth over the years ahead. I see no reason not to. Very healthy organization, and taught a lot of us about what aggregators are all about. I will be happy to send. I have a copy, not a hard copy, but it's in my computer. But I'll be happy to send the whole report, the McKinsey report, to you. I mean, don't worry, no charge or anything. Just drop me an email and say, hey, send me the McKinsey report, and I'll be glad to do so. And guys, let me thank you again. Scott, as usual, articulate and helpful. Bruce.
Well, thank you, Bruce, and thank you, George.
My pleasure. Bruce, I can always count on you, Canton, for how many years? 30, 40 years now. A lot.
George, thank you very much, and Scott, thank you too. This has been great.
And I'm going to tell you one last thing, guys. Just a little personal thing. Bruce is going to become a grandfather for the first time. I couldn't resist, Bruce, for the first time. Can you imagine a guy like that? Oh, man, I'm already there. I don't know about Scott. But anyhow, congratulations, Bruce, on that one, because that's another story. But we'll get there later. Okay, see you guys. I'll see you guys. I hope to see you guys next Monday morning or sometime very, very soon. Okay, and we will be with you. One last slide. Also, you can also go to the back to our Monday morning and get that get the archive too. Okay. So thank you guys, and we'll be talking to you later. Wait, just 1 second. There we go. Okay, here we go.